Right, let's go to the other big news today, the economic story out of the RBA meeting today. It was the last meeting, of course, for the year. They have chosen to leave the cash rate on hold, 4.35%. This is the 9th consecutive time rates have been on hold. Let's get some insights now. Sky News Business Editor Ross Greenwood. It's still a 13-year high, this cash rate. The RBA, though, softening their tone, maybe a little bit more optimistic that inflation is going to come down. What was your read, Ross?
They might even open up the window for the election, to be honest, Peter, because this might be what really Anthony Albanese and Jim Chalmers have been hoping for, and that is maybe markets now starting to price in that early next year there is an interest rate cut, but there's definitely a change in language and tone at the Reserve Bank. Though they did not consider cutting interest rates, they certainly did not consider raising interest rates either at this meeting. Here is the language that changed. So I want to take you back a month. So this is what they said a month ago. Policy will need to be sufficiently restrictive until the board is confident that inflation is moving sustainably towards the target range. At that time, nothing was in, nothing was out. That statement was now gone, and it now says the board is gaining some confidence that inflation is moving sustainably towards the target. Now, Michelle Bullock was pressed about this today in the media conference and about what this meant. And she effectively said that they really now start to see that the underlying inflation does start to fall from here. The very slow Australian economy, the very weak consumer in Australia, at some point starts to turn around. There's anecdotal evidence of that even coming out of some of the retailers today. And so right now you can see these numbers. The headline rate of inflation is artificial, boosted by the government's energy rebates. Economic growth is really just teetering above recessionary levels right now. Wages growth still is rising but will come off. But the one thing that the governor says today is even though inflation might be moderating, families are going to feel the effect of this for some time because prices, since they really started to rise, are 16% higher than what they were, and those prices are not going to fall anytime soon. So that's one of the keys here. But after all of this time, and you mentioned 9 decisions, it now goes for 13 months that the Reserve Bank has not moved interest rates here when other parts of the world have been moving rates at the same time.
All right, we know they don't meet in January. Their next meeting is Tuesday, the 18th of February. Now, what are the chances of a rate cut then? And if they get a rate cut then, the hammer could fall on the election, I reckon.
Absolutely.
They'll avoid then a March 25 budget. And there's another meeting at the end of March too, so you could have a rate cut before an election, possibly even a rate cut inside an election.
Well, that's partly what the process might be. So if we go and have a quick look at Reuters, now it judges through the money markets and where they go to as the odds of rate cuts and when they might take place. The next meeting, as you say, in February. So what we can see there is even today, the odds of a rate cut in February, now 57.4%. This even ticked above 60% at one stage today. And that's because money markets immediately reacted to these statements from the Reserve Bank. So what happened is money market interest rates went down, the Australian dollar went down, the stock market went up. And all of that says that the markets have now got more anticipation. Now, if you move forward to the following month, markets are all but pricing in that there will 100% chance be of a rate cut in April. So if it doesn't come in February, by April it definitely will have come. So that, you're right, will affect the timing of the election. But of course it also may influence the spending of Australians. They might start to feel a little bit more loose with their spending. And really it's the fact that consumers have really started to tighten their belts over the past 6 months that has really led to that slowing of our Australian economy.
Have a wonderful Christmas. I love having you on the show, Ross. See you next year.
Quite okay.